Hey ladies and gentlemen, welcome back to my channel, Financial Intelligence. I am your host, Joseph Barnes Conley, and today's topic of discussion is going to be what is a market melt-up, or also known as a crack-up boom. But like I say for every video, I'm not a financial analyst or a financial advisor. I'm just a student of basic financial education. So ladies and gentlemen, very simply, what is a market melt-up? A market melt-up is a sharp improvement in the performance of a stock market due to the reasons other than fundamental improvements in the economy. I want you to remember that. We're going to come back to that. What is a crack-up boom? Pretty much it's the same thing. It is a crash of the credit and monetary system due to the continual credit expansion and price increases that cannot be sustained long term. So, ladies and gentlemen, what I'm going to do is I am going to show you 3 examples throughout history of the countries of Venezuela, Turkey, and currently the United States, and I'm going to show you what happens during times of a melt-up or crack-up boom. So we're going to start. Here you go. This is a chart that shows a yearly inflation of 14,200%. The Venezuelan Boulevard will lose 90% in just 5 months, ladies and gentlemen. So by central banking and bad economic policies, Venezuela somehow, with the they caused a hyperinflation that lost 90% of its value in 5 months, ladies and gentlemen. And here it is. It went from 20% to almost 1.3 million %, as you can see. All right. But what followed next was their stock market. Their stock market followed too. As you can see, here it is. You see how it started in the trend, and next thing you know, again, the stock market inflated just with the currency supply. So here it is. And now because of this, because of the hyperinflation, what it did was it ended up causing the people to lose their wealth, ladies and gentlemen. And so what eventually happens naturally over time throughout history, like we've seen over and over again, when the currency is no longer able to purchase basic needs and goods, what happens? The people naturally go back to gold and silver. And let me read a little article. It says, the Boulevard has already lost 73% of its value alone in 2021. And the IMF, International Monetary Fund, estimates the annual inflation rate will reach 5,500% by the end of 2021. All right, I'll leave a link in the description for this article. It says, half a gram of gold buys you one night stay in a hotel. A local hotel, while a meal for two at a Chinese restaurant and a haircut will cost you a quarter of a gram or an eighth of a gram, respectively. The gold flakes are carried in people's pockets, usually wrapped up in worthless Boulevard notes. While some shops are equipped with scales to weigh the gold flakes, most sellers and their customers have become so familiar with the flakes that they evaluate them on site. For example, the barber and his customers who transacted for a haircut charged 3 gold flakes, equal to 1/8 gram of gold, approximately around $5. Gold is starting to penetrate nearby cities such as regional capital Ciudad Bolivar, as stores and shopping malls gladly accept gold in exchange for dollars from miners who are seeking to cash out. So I will leave the link in the description. Remember, throughout history, throughout time, when people no longer believe in the currency, they naturally go back to gold and silver. Why? Because of its properties. You trust it. All right. And what did gold and silver do? It does what it has to do. It's a store of value. An exceptional store of wealth. In U.S. dollar denominated terms, the price of gold is down right now. But Turkey, Venezuela, Argentina, and other countries whose currencies have weakened substantially in the recent months, the precious metals are soaring. This alone should be enough reason to store part of your wealth in gold. Need further proof? According to a recent Bloomberg article, the cost of a black market passport in Venezuela right now costs around $2,000. That's $125,000 in bolivars, or 68 times the monthly minimum wage. A Venezuelan family that had prudence to own gold and silver would be in a much better position today to survive or escape President Nicolas Maduro's corrupt regime In extraordinary circumstances, this yellow metal can literally save your life. So gold does exactly what it's supposed to do, ladies and gentlemen. Protect your purchasing power. As you can see here, gold will always do the accounting. This is per 1 ounce. Will always do the accounting for every single currency that's printed. All right. Remember, store of value, store of wealth, a retention of purchasing power. Remember, wealth is never destroyed. It is merely transferred. And if you position yourself accordingly, you will have no change, or you will actually come out with more gains than you had before. All right. So that is one example of what happens during a market melt up or a crack up boom, and that was in Venezuela. Let's move on currently to Turkey. As you can see, this is currently Turkey's money supply. All right. Same thing. It shot right up. All right. But also, look, here's their stock market. If I put them side by side, if I put them together, you will notice that they're exactly correlated. It has nothing to do with the economy, just all the currency that's being pushed into the market. But again, what happened? The people's, just like Venezuela, the people's wealth and purchasing power got inflated away. But gold and silver, what did they do? They did their jobs. Here you are. You can get this at usgoldcharts.com. I'll leave a link in the description. As you can see, as the lira crashed, silver did the accounting. As you can see. Same thing with gold. See, as the lira crashed, gold exponentially shot up. See how it's the opposite? Remember, store of value, store of wealth protects your purchasing power. All right, ladies and gentlemen, so we're going to move on to the United States, where things are insane when it comes to terms of the currency supply and inflation. All right. Did you know in the United States that 80% of all U.S. dollars in the last 22 months have been printed? 80% in dollars in U.S. history, ladies and gentlemen. As you can see, and this is according to the Board of Governors of the Federal Reserve System. All right, and I will leave a link in the description to the article. That's insane, ladies and gentlemen. All right. As always, I always have a picture of the M2 money supply. All right. You see that? Let me keep this up. Let me show you something. Let me show you Turkey's money supply. If you look at it, they are exactly the same. Do you see it, ladies and gentlemen? Do you see that? Remember, the dollar is the world's reserve currency. All other currencies are pegged to the dollar. And so when our central bank prints currency, all other central banks around the world follow as well. All right. But hey, look, same thing as all that currency being printed. Look what happened to the Dow Jones Industrial Average. Same thing. It went parabolic. Do you see that? Do you see the correlation? Excuse me. Do you see it? Do you see the correlation, ladies and gentlemen? I can literally put them side by side, one behind the other. Same thing with the S&P 500, the Standard & Poor's. Exact same thing, shot right up. Same thing with Bitcoin. You see that? Oops, excuse me. That was the S&P 500. Same thing with Bitcoin. See that? Is it directly correlated with the currency supply? All right. Remember, definition of a melt-up. A sharp improvement in the performance of the stock market due to reasons other than fundamental improvements in the economy. All right. So it shot up just because of the currency supply. And how do I know that? Well, according to shadowstats.com, unemployment is almost 25%. And that was in November. I know. All right. I had printed that out a few days ago. Actually, the S&P 500 and the Dow Jones Industrial are actually higher now than they were when I actually printed these out. I want to say about 2,000 points. All right. So one thing also, ladies and gentlemen, that I'm learning about economics is there's something called hedonics. This is where the Bureau of Labor of Statistics will take two items and they will measure the cheaper item in order to make inflation look more attractive. I mean, inflation is not attractive, but to keep the consumer price index percentage down. For example, if steak costs $15 and turkey costs $10, they're going to measure the turkey. Also, this doesn't account for gas and housing. All right. So they said recently inflation or the consumer price index was at 6.8%. Ladies and gentlemen, that is a lie. According to, again, shadowstats.com, inflation is almost at 15%. All right. And that's actually believable. You can see it when you go shopping and you buy items. It's gone up crazy. So same thing with mortgage-backed securities, ladies and gentlemen. This is why your house has gone up in value, is because central banks after the lockdown, they went in there and they started purchasing mortgage-backed securities, which is the reason why the housing bubble has expanded as is. Well, mostly, okay, so let's say, oh, okay, well, I don't have any stocks, or I don't have any money in any equities or anything. I keep my money in bonds. Well, do you guys know what a bond is? All a bond is literally a blank check that's created from the Treasury and sold to banks and given to the Federal Reserve, and poof, currency is born. Do you know what that's called, ladies and gentlemen? If you that's called counterfeiting. So all day long, our financial system is nothing but counterfeiting. All day long. And why would you? And right now, a 10-year yield bond is at what, a 2% interest rate, and yet inflation is at 15%. And so you're not getting any gains. You're losing. All right. Remember, this is a channel, an education channel. This is not a finance channel. I'm not telling you what to do with your currency or your portfolio. I'm just showing you trends as history as it keeps repeating itself. All right. One thing that's happening lately is this is a picture of the central banks that raise interest rates, have done nothing, or lowered interest rates. Usually, all central banks are correlated together, and they usually will lower and raise interest rates at the same time. However, that hasn't been the fact. For example, Turkey lowered their interest rates, which caused a hyperinflation. All right, we are thinking about raising our interest rates, which is going to cause the stock market to crash and the housing bubble. All right. What's going on is they're not correlated together right now. So, which is why if one market crashes, a lot of times another market will crash and another market will crash. Take a look. After Turkey crashed, Pakistan crashed. After Pakistan crashed, Sri Lanka passed. Who's next? China? India? Russia? Who knows? All right. Remember, there are ways to protect yourself. Everything, whether it's bonds, crypto, stocks, bonds, everything comes from gold, including cash. I'm going to show you John Exter's pyramid. Do you see that? Everything comes from gold. Why? Because gold is the ultimate store of value, the ultimate store of wealth. It means control for central banking and government, but it means economic freedom and prosperity for the people. That's the reason why we don't use sound money. There's the reason why we use fiat dollars, and our wealth is getting inflated away. But ladies and gentlemen, that's it. I know it's a little bit of a long video, but like I always say, please like, please comment, please subscribe, but always please self-educate and educate others. Thank you and have a very good day.